Equities continue lower as the coronavirus takes over. The risk-off trade has really pushed them down 3.5% from last week's all-time highs in the E-minis. So this isn't just a flash in the pan kind of a trade, and this dip is not a buying opportunity, at least not yet, as we have seen a rocky trade, a back and forth, but now it seems to be very one-sided. Sellers coming in, risk coming off. We're seeing Treasury yields go down. They're at their lowest since October. So obviously there's a bit of a hand-in-hand here. Stocks down, Treasury yields down, and at this point I think that's going to continue until there's some resolution. This is not going to be, we're not looking for any sort of levels that are going to technically hold, at least while the uncertainty is so high. And if you look at the VIX index, yeah, I did just say that everything was coming apart in equities, but we did sell the VIX up, but not in that panic level. It stayed below 20 for this entire move we saw. And at this point, I think that we need to see the VIX above 20. And I don't even know if that's enough to cause people to panic. At this point, you're just sort of shifting out, selling your stocks and turning it into bonds, or selling your stocks and turning it into some other riskless asset. And I think at this point, the VIX index may be a backward indicator. We may be able to see how things traded at a certain point, but not in the moment. So at this point, I'm watching the VIX index staying below 20. We need to get that above 20 in order to start to see any kind of concern or panic type selling in equities. And lastly, next week, well, we go in, we're going to see what kind of fallout we get from this whole coronavirus week. Obviously, things are very, very sketchy. How is it going to affect global growth? How is it going to affect any type of concerns from the Fed? How is it going to affect U.S. economic data? At this point, it's all very unknown. And so that's why I think we're seeing continued selling in equities, continued buying in treasuries, and looking for volatility to remain high. If this does reverse itself, if we see stocks go up, if we see treasury yields go up, look for volatility to get hammered. But at this point, I think we're waiting for the dust to settle, and that could take some time. So we do have a bunch of earnings next week with Google headlining, and that could maybe be enough to stop the selling for a brief period. But ultimately, I think equities are in for some more selling as we look to wait for some confirmation from the coronavirus and its effect on global growth.